Hi, I'm John Muschalek with HilltopSecurities, and I'm here with Tom Kozlik to talk about the municipal markets. This is the Muni Minute. So Tom, you've been bullish on municipal bonds going back to at least June, and that was prior to the Fed holding steady on rates, coming close to government shutdown, and the escalated conflict in the Middle East that has just come up. So with all of that coming into play, how do you feel about the municipal market now?
So I'm running out of synonyms to describe appealing and attractive. Last week I wrote that municipal yields are at generationally enticing levels. They've been high and they continue to be high, and they're continuing to be attractive. Even though there is some negative investor sentiment out there, I think that they're still very attractive.
You remain bullish, and we've seen that over the last couple of months, but why is that, given the outflows that we've seen from some of the municipal money market funds and such over the last 5 weeks that have had some pretty staggering numbers?
I think that investors are waiting for the Fed to give a better idea of when it is that rates are going to consistently stay level or fall. And so I think that investors are trying to time the market. And one of the things that I'm really concerned about when folks do that is there likely is going to be a situation where there could be some bond scarcity going into 2024 and 2025.
We just averted a federal government shutdown. We've got a new date coming up of November 17th, which is the next deadline. What does that mean for the municipal market?
You know, I think that it's really uncertain of what is going to happen on the 17th, but there really wasn't much of a market impact. There wasn't a lot of volatility with yields when there were past shutdowns, number one. Number two, my base case is that if there is a shutdown, it would last maybe 30 days, and I'm not expecting any credit implications where municipal issues are concerned.
So let's expand on that a little bit. There's potential for macroeconomic weakness coming forward. How do you think public entities are prepared for that, and how would that impact the market in general?
So back in 2021, the beginning of 2021, I started talking about and writing about the golden age of public finance, municipal credit, especially where state and local governments are concerned. Credit peaked probably about a year and a half ago, but reserve fund levels are still very high. I think that state and local governments are very prepared, probably more prepared for potential macroeconomic weakness than they've ever been.